welcome back to Octa, On-Chain Technical Analysis. Today we're going to be discussing a long-term indicator, and that's market dominance, Bitcoin's dominance. And unless you've been living underneath a rock, it's pretty obvious that we're in a pretty typical long-term bear market. And this chart from Glassnode shows you the last few bear markets, and this one in particular shows you the hodl waves. So you could see that there've been some more mid-year holders. Basically, the tranche or the cohort of the 6 months to about 2 years, those holders have been increasing their proportion of the Bitcoins that they hold. And that's good. That's a sign that there's some accumulation, but it's also a sign that we're in a bear market. I don't think this is changing anytime soon. So as I said, today's main topic is Bitcoin's dominance. And what I want to look at and point out, not just what the numbers are, but the data behind the numbers. We need to understand not just what the chart looks like, but what's the data behind the numbers and what's the data behind the data, because then you could really interpret it properly. So let's go to the first one. One way of looking at Bitcoin dominance is looking at the Altcoin Index. As you can see here, we've been in Bitcoin season. I'm not sure you can see those words here. I'll just move the chart. There you go. We've been in Bitcoin season since the beginning of the year. It feels like it's been forever. So that's one way of looking at Bitcoin dominance. But the more popular way is looking at this. This is from CoinMarketCap. You could probably get it from Glassnode and some other on-chain company. And it shows Bitcoin's market cap versus the total market cap of the crypto market. And what you want to see during a bear market is a constant increase in the dominance or proportion of crypto assets that held in Bitcoin. And you were seeing that. I'm going to move my pointer here. You can see that here. Bitcoin was about 41% in May, 42%, and it crept up at a pretty good way, pretty rapidly actually, to 47% by June 11. But then what happened was, beginning in June 11th, it started declining. So this is not good. This doesn't look like we're in a typical bear market when you see a decline in Bitcoin's dominance. But here's the deal. You got to look behind the data, like I said earlier. Like, what's included in this Bitcoin dominance? And if you look beneath that data, you're going to see that stablecoins are included in the data because, of course, stablecoins comprise a part of that total market cap, even though they don't move, right? Theoretically, stablecoins stay at $1. So let's just focus and drill in on stablecoins. And you can see, I'm going to go to it right now, you can see during that time, beginning on June 11th, when Bitcoin's dominance was decreasing, stablecoins, including Tether, USD, Binance, stablecoins, proportion of the total market went up rapidly. And if we recall, during this time, there were many aftershock events from the Terra Luna crash. And then there was, as you know, Voyager and Celsius, all this going on at the same time. So because of that, many investors went into stablecoins as a safe haven rather than going to Bitcoin. So what I think you need to do is, instead of, and let's go back to the Bitcoin dominance chart. Instead of looking at this chart alone, at Bitcoin alone, Bitcoin's dominance divided by the total market cap, we need to look at Bitcoin plus stablecoins dominance divided by the total market cap. And if you do that, then you will see that we are indeed in a consistent pattern that we've seen in previous bear markets. So thank you, everyone. I hope that this Octa helped everyone learn about Bitcoin dominance and why we need to look beneath the numbers.